All right, in this video, I want to talk about 5 stupid mistakes that people make when getting a home loan that cause their loan to be denied. So if you're in the process of getting ready to apply for a loan, or maybe you're already in the process of getting a loan, stay tuned. You don't want to miss this. These 5 things you'll want to avoid. Hey, are you thinking about buying a house, but you need help with your down payment? Well, you're not alone, and I've got you covered. I've created the ultimate down payment assistance guide, which is available for you to download for free below. I'm telling you, this guide will save you hours and hours of research. Hope you like it. All right, so the first stupid money mistake that I see happen is moving money around. And what do I mean by this? I'm talking about taking money from one account and moving it to another account. Sometimes we see a move from one account to the next account to the next account, or there's multiple accounts and we move it all into one. And it's like this game of connect the dots in this huge labyrinth. And although it causes a lot more work for us, that's not the reason why it's a big stupid mistake that can potentially cause problems. It's more so that the lender, by law, they're required to meet certain rules, and there's things with anti-money laundering. When it all comes down to it, the government doesn't trust you, and they want to make sure that you're not doing illegal activities when it comes to real estate transactions. No joke. So the reason that lenders verify this stuff, they have to look at where the money has come from over the last 60 days. And so if the money's coming from mom or from your business or from this account, but really it needs to be over in this account, if you just move it without letting your mortgage professional guide you through the process, hands down, you're gonna cause yourself problems, and potentially you're gonna cause something to happen to where the lender's not gonna approve your transaction. Maybe those funds will no longer be eligible to be used because maybe they've been moved through an account that you can't verify or that's not eligible for the transaction. Because of that, you might not be able to use it, and all of a sudden you don't have enough money that you can actually use for your transaction to get the deal done. Because just because you have the money does not mean that the lender automatically lets you use that money for the real estate transaction. Like cash. Cash is a huge no-no. And so a lot of times people are moving cash and trying to put it into the equation. That's a problem. So moving money around, that's a huge stupid money mistake that I see people do all the time, and it causes problems while getting a home loan. All right, stupid money mistake number 2 that we see happen is you take a leave of absence, or like quit your job or change careers all in the middle of getting your transaction. No, don't do that. That's a huge no-no. At the end of the day, you were pre-qualified based off of the income, the credit, the assets, the income that you had at the time of pre-approval. And now you're changing the game on everybody by taking a leave of absence or by quitting that job, which I swear that actually happens. And people are surprised. They're like, wow, I don't understand. How does this impact my ability to get a loan? Remember, the lender has to prove that you have the ability to repay the loan. It's the law. They have to do it. And so if all of a sudden you're on a leave of absence and now they can't verify the continuance of your income or the stability of your income, or you actually quit your job, or, and I've seen this happen tons and tons of times, is you change career fields, or you go from being W-2 to 1099 and you're like, well, I'm still with the same company. No, you're now self-employed. Changing your employment in the middle of the transaction is a huge no-no. That's a big money mistake that people make that causes problems for them, and most likely is gonna result in your loan getting denied. All right, stupid money mistake number 3 is applying for new lines of credit. All right, so in the last one, I was saying that when you applied for your loan to get pre-approved, your pre-approval was based off of your income, your assets, and your credit at that time, along with your debt-to-income ratio that has to do with your debts, right? So if you go apply for this mortgage, you get pre-approved, and then the next day, the next week, the next month, whatever, you go out post pre-approval and you go apply for new lines of credit. Not only have you just added new inquiries into your credit history, which will impact your credit score, it's gonna drop your score for a period of time, maybe even for a long period of time, which that alone could impact the interest rate that you get, maybe even your eligibility for that loan. Now, the worst thing you could do is like you go apply for a couple of credit cards, you apply for a car loan, you apply for all sorts of different lines of credit. What that's gonna do is gonna tank your credit score. So let's say that you had a 650 FICO score and you needed a 620 FICO score in order to be eligible for the program that you got pre-approved for. Fast forward a couple of months, you're now in contract to buy the house, your credit report's expired, so we have to update your credit report. Lo and behold, you now have a 593 score or whatever, and now you're no longer eligible. The deal is dead. Or maybe you got to take some other type of financing, come up with a larger down payment, something that you weren't planning on doing. So that's a huge deal killer. A big stupid mistake people make in the process is applying for a whole bunch of credit in the middle of trying to get a home loan. All right, stupid money mistake number 4. Going on shopping sprees. People like to spend money sometimes, and unfortunately, sometimes that spending can cause their loan to get denied. You know what happens a lot of times is that, you're in the process of buying a house, you get all excited, you're like, oh, I need the washer or the dryer, you're at Home Depot, they got the 0% for the first 12 months with the store card, you know the story, and you sign up for that. And what happens? Now all of a sudden you got a new monthly payment that we have to add into the equation. And not only is there now a new monthly payment that has to be added into the equation, just like the rule before where I was talking about how your credit score is going to get hammered, well, that's going to happen as well when your credit report now factors in that new debt that you have or the new debts that you have. Now, the one that I've seen many times, and it just kills me every time I see it, because sometimes you had a credit card or something, and the payment's $50, $100, maybe it doesn't kill the deal. Maybe you just got to shift a little bit. But if all of a sudden you have to add in $800, $1,000 a month into the debt to income ratio for a car payment, a lot of times that's gonna blow your deal up. A lot of people are already at 40% debt to income ratio, 50%. And so adding additional debt into the equation is not something you wanna do when you're trying to get a home loan. That will most likely kill your deal, or at the very least, gonna give your mortgage professional PTSD. All right, stupid money mistake number 5. Now this one might not even make sense to you initially because you're like, well, wait a minute, it's like an upgrade. And what I'm talking about is changing jobs in the middle of the transaction. Now, before I had said like you quit your job, you go on a sabbatical, you shift from being a W-2 to a 1099 with the same player. I'm talking about you've changed your jobs and now you work for somebody else. Now, that's not gonna be a deal killer for sure. However, you got to coordinate that with your mortgage professional to make sure that what you're doing is not going to cause your deal to blow up. And there's several circumstances where, depending on how you get paid and what income was needed in order for you to be eligible for the deal, you might not be able to use that income. Let's say you had a job beforehand where you were getting commissions or overtime or bonuses, stuff like that. And now you're going to shift to a new employer. Well, a lot of those pieces of income that I just mentioned, you have to have a history, and the lender will average those out. So if all of a sudden you don't have a history to base that off of because you just started with that employer, well, that's gonna cause problems, and that's probably gonna reduce the amount of income that you have to qualify for. Or maybe you go from, you're paid a salary right now, but you're gonna shift to a new place, and although you're gonna make more money, it's based off an hourly rate, not your actual annual, salary. Well, now all of a sudden we're averaging out income versus you just automatically getting 40 hours a week or whatever. So there's a lot of little nuances that take place when you're switching jobs that at the very minimum, you're gonna wanna coordinate with your lender. I get that you gotta pounce, I get that you gotta strike while the iron's hot. You can't just tell this potential employer like, oh, I'd really like to take this great job you're offering to me, but I gotta wait for 6 months or whatever. I'm not saying wait forever, but in a perfect world, you would wait until your transaction's closed, but I get that's not realistic. That being said, make sure you coordinate that with your mortgage pro so that they can give you the steps you need to take to minimize the brain damage to get you across the finish line. I hope you got value out of this. If you did, do me a huge favor, hit that like button. Make sure to subscribe. I'd love to hear your questions. Put them in the comments below. And if you'd like to talk to me and my team about getting pre-approved for a home loan, we'd love to help you. You can get a hold of us in the notes below, and we'll see you on the next video.